Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today, a guest we haven't had on in a while, BrotherJohnF from the Silver for the People blog. John, thank you so much for joining us today.
Thanks for having me, Elijah. It's great to be back on.
All right. Well, I'd first like to discuss a little bit about the silver market. Now, I recently interviewed Bill Murphy, and he says that really the environment in the silver market has really changed. It seems like we're seeing silver breaking out, and if silver goes above 1850, then we could see, in Bill Murphy's words, silver rocket ship higher. Did you want to discuss a little bit about this, and what are you seeing in the silver market?
Sure. It could rocket ship higher at any point, but yeah, technically it looks like it's made a bottom. That's not absolutely 100% certain, but everything I'm seeing indicates that there was a long period of time where a lot of people were able to stack silver anywhere between 15 and 17 for over a year or so. And if you look at the volume that came in, that's mostly, paper traders. But now that a lot of that volume is below us, if you look at a long-term chart, it looks like a volume buying spike now as we're moving up. So, yeah, it could be a repeat of 2010, or it could be a repeat of 2006 where it rallied just a little bit. Or it could be something completely new, and it could gap up and just run away. I know some of the silver mining stocks, I think First Majestic is one, have actually put gaps in the charts on the daily, and we've had in the past where gaps don't even get filled for a long time. So a lot of things can happen, but it definitely looks like we've made a turn, and I personally think it's related to some of the news coming out, especially Deutsche Bank's admission, and also, most importantly, in my opinion, is the news coming out of China.
Now, I guess if we wanted to touch on both of these, and if you wanted to expand on both of these just briefly, I guess first with Deutsche Bank, just to give a little background for our viewers, Deutsche Bank recently settled on some U.S. lawsuits accusing them of gold manipulation, gold and silver manipulation. I guess, did you want to discuss a little bit about that? And a lot of us have been talking about gold manipulation and how it seems like the gold and silver prices have been manipulated for a long time. So it seems like this is pretty much proof that those of us who have been talking about that have been right.
Yeah, I think everybody's seeing that now. A lot of the naysayers are being really, really quiet. I'm not really sure what the move means. I don't think that the Deutsche Bank is behind, this whole game. I think it's the people out of London and Washington who are running the show. So in the past, Deutsche Bank has been their lackeys, and I think it's going to be the same case now. I think they're just maybe taking an early fall. Supposedly they're going to turn state's evidence, we'll say, or they're going to assist in who else was complicit in this. I don't put too much stock in the story because I think that the U.S. has a pattern of throwing these banks under the bus. We've got the history of the U.S. fining these foreign banks and them towing the line. When by all rights, they should just told them to stuff it. So I think that Deutsche Bank is just operating as a lackey for London and Washington and just maybe taking an early blame. I'm not really sure what's behind the story. Eventually, we're going to find out what's behind the story. I suspect that maybe they're just trying to get out ahead of the curve and escape from the trouble that may explode very, very soon.
Can you expand on this? So what is this trouble that you speak of that may explode very soon?
Sure. Well, eventually the fact that I'll say Anglo-American powers have been manipulating gold and silver to preserve their petrodollar currency pricing scheme, it's going to come out. Just the same way the London gold pool eventually was exposed. It was kind of an open secret. And, with the work of people from GATA and a whole bunch of others, there's a lot of people who've been doing this work for many, many years. Eventually it's going to come out that it's London and America who are doing what they're doing. They're suppressing the precious metals to keep their debt paper Ponzi scheme going. That's exactly what's happening. And I personally think the story out of China is much, much bigger than the story out of Europe. But again, that's just a personal perspective. But my point is that when the truth finally comes out, when there's an admission that it's actually government policy, and a lot of people have hinted at that. If you remember the results of the CFTC hearings and Ted Butler's great hope in Bart Chilton that he would come through and deliver justice to the silver stackers, and of course none of that happened, and then all of the lawsuits that were dismissed. If you remember, one of the key phrases was, I can't quote it now, but basically the explanation was that it's not that there isn't any manipulation, but implying that the people who are behind it are above the law, sort of John Titus sort of scenario where the Justice Department, who's supposed to be prosecuting the banks, is actually taking orders from the banks they're supposed to be prosecuting. So it's one of those situations, and I think it's going to be very, very explosive, just as if you look at what happened when the London gold pool crumbled back in the 70s. Where did gold go? Where did it go? $35 to $800 eventually over the course of the 70s. So that's the kind of explosive move I'm talking about.
Now, did you want to expand a little bit about the other thing you were talking about, what's happening in China right now and how it relates to what we're seeing happening in the precious metal markets right now?
Absolutely. I think what's going on in China is the most important story that's come down in a very, very long time. And the reason why is because of the arbitrage opportunity that this presents. And it's something that a lot of people don't understand how it works. And to just explain briefly what it is, to execute an arbitrage position or an arbitrage trade, we'll say, you have some basic requirements. First of all, you have to have two markets open at the same time in the world that are trading the exact same thing with the exact same, well, it doesn't have to be the exact same unit of measurement, but it has to be at least, you have to be able to duplicate it somehow. Like, you could match kilos with ounces, but basically you have to have two markets open at the same time with the same commodity. Now, if you think about it, we've never had that, and that ought to give you pause. That's something that I've wondered about for many, many years, especially someone being involved in Bitcoin and cryptocurrencies, where these are things that I trade and arbitrage around the world 24/7. And yet some of these most important physical commodities that are essential for the function of world economies, they trade based in the U.S. and London. They trade in certain currencies. And so what does that do? Well, it makes it so you can't arbitrage them. So having China open up a market where people can execute an arbitrage trade, in other words, they can instantaneously buy the same amount of silver or gold in China and sell it in the U.S. or London, or the opposite, that gives them the opportunity to actually execute that arbitrage trade. Now, when you think about that, what does that mean? Well, if you take stocks, for example, and those are indices on stocks, those are arbed more often than anything else. The index, they'll have a basket of stocks, say the S&P 500, or take a smaller index, and they'll buy and sell the entire basket, and then they'll match it to the index. And so that's how they're kept in line. But if you think about the way stocks work, they're held in street name. It's the DTCC, Water, Street, Flood, and Fire, as Bixweir points out. And so that's kind of a paper shell game. Nothing really gets exchanged. It's all held in street name. It's just kind of like our money is. It's just a ledger somewhere. And it's probably not even paper. It's probably on a computer. Now, if you're talking about physical commodities, it's a whole different ballgame. Because if somebody arbitrages something, let's say that the price of silver is $20 in China, but it's only $19 over at the LBMA. But it's actually trading at the same time. The markets are open at the same time, and it's the same amount. Well, obviously, that's a lock-in. You just simply sell it in China, and you buy it in London, and you made $1 profit per ounce, and it's a done deal. Except for the fact that now what's required is you have to physically ship it to China, right? Because you have to make delivery there of the physical metal that you bought cheaper in the West. You have to deliver it in the East. So what arbitrage actually does in commodity markets is it makes things move around the world. It makes commodities move to different places. And if you think about it, if this happens the way I think it's going to happen, is silver and gold are going to move to where the money is, and the money's in China. We just had a story Friday where the crazy Looney Tune guys at the Treasury Department are talking about putting our trading partners on a monitoring list because they have too large of a trade surplus with us. I think, yes, last year's trade surplus, a $365 billion trade surplus deficit we ran with China. So they're blaming China for our trade deficit with them. Well, we could make something they want to buy. Well, now here's something they can buy, gold and silver. So that's just part of the story. It's a big story. I'd love to talk more about it.
Can you elaborate on how the precious metal markets are different than other markets, how the markets are changing, and how this all relates to the coming rise in silver prices that you are forecasting?
Sure. So we have commodities traded, basically based in U.S. dollars and British pounds. You can look, for example, at the oil trade. Now, that's kind of an interesting one. I wanted to compare that to silver because if you remember the story that we had a while back where we had the silver fix story, and that was a big story, and everybody thought that was going to blow up because, they were going to kick those people out and redo the thing. And if you think about it, the whole idea of a silver fix is based on the idea that you don't have a real market and you don't have any arbitrage. I mean, the question I would ask is, what's the daily oil fix? And, the answer is there isn't an oil fix. We don't go and say, here's the price of oil for today. And everybody has to do that trade. No, oil trades, and even oil is not trading in a free market because, again, the major culprits here, U.S. and Britain, they rig that market. And the way they rig that market is by making the commodity itself a certain type of blend. So your two major types of oil that are traded in the futures markets are WTI, West Texas Intermediate Crude, and North Sea Brent, British and American contract. So if you have a barrel of oil, then it has to be compared to those, or it has to be converted to those. It has to be, I don't know all the intricacies of the oil market, but there's all different types of barrels of oil. So you can see they maintain control in that way. But with the silver fix, that there's not this trading that goes on 24/7 for gold and silver, which is an absolute absurdity in this day and age. And hopefully China will do something like that. I can't imagine why they wouldn't make those things trade 24/7. It doesn't mean you have to take delivery in the middle of the night, but you should at least be able to trade it. But if you look at the way these markets work, you have to follow them around the clock. So we're always talking about, well, we're looking for the New York Open, and then we're looking for the London Open, and then we're looking for the Japanese Open. And why is that? Well, because then there isn't any arbitrage. It means that you don't have to move the stuff to settle it. So that's really, really important. I can't emphasize how important that story is. It doesn't matter if there's arbitrage between the COMEX and the LBMA, because these guys are on the same team. But if we start to see arbitrage between China and America, like I mentioned, the trade deficits, the $365 billion trade deficit last year. If you take 1% of that money and buy silver with it, it comes to about a quarter of the entire world silver supply, with 1% of our trade deficit with China. So imagine what would happen if China spent 10% of that money on silver. So the big question that results from this is how do the Western powers prevent all of that physical silver and gold, which they probably don't have, flowing to China to meet these arbitrage requirements? Well, one thing they can do is they can raise prices here faster than they raise them over there. Because if the price in the West is higher than the price in the East, then the ARBs are going to move the metal to the West. So that is my opinion of what is behind this recent move. I may be wrong, but that's one way to prevent all of that rest of that metal flowing over to China. But that means the price is going to have to rise awfully fast, and it may kind of create sort of a bidding war. And that can end up being very interesting.
Definitely. And I'd like to discuss a little bit more about taking delivery of gold and silver. Now, you were talking about in a recent video you posted about how if large traders in the markets for gold and silver, especially silver, if large traders, if they take delivery, then this could be, quote, lights out in the silver market. Did you want to discuss a little bit about this?
Sure. Well, if you look at, I did a video recently covering the difference between the three groups that are in the Commitment of Traders report. And you have the commercial hedgers, the large speculators, and then the small speculators. And the small speculators don't really even matter because they're so tiny. It's just kind of a stupid indicator that people look at that is meaningless. But if you look at the divergence that's happening right now, the hedgers, which are basically the two groups that are in the hedgers are, of course, the people who mine the silver and are selling the physical into the market, and then anybody who's actually taking delivery of the physical, those are going to be that group. The other big, and that group is shrinking dramatically. The other group that's growing and setting record highs is the large speculators. Now, the large speculators are by definition people who are trying to make paper profits. That's the definition. They're speculators. But what if they aren't? What happens if all of a sudden they flip the switch and say, hey, this time it's different. We don't want dollars for our silver. We want our silver. It's the same story that people have been talking about for a long time, but it's a little bit more disturbing if you look at the big divergence now and how large the volume has become and how large that number has become. So it could be the case that Bill Murphy's $100 silver, that could be conservative. We could be looking at Vic's weird numbers for silver. It could be anything.
Now, I wanted to move now to viewers' questions, and this viewer is wanting to know, what are the historic reasons for the governments of the world, their selection of the 16-to-1 gold and silver ratio? And then he also asks a follow-up question to that, but I guess, did you want to first answer his first question on that?
Why did the governments of the world choose to fix the gold-silver ratio at 16? Is that the question?
Yes.
I'm not well versed on the exact history of the gold-silver ratio. As far as I know, I don't believe the Constitution actually sets a gold-silver ratio. It sets silver as a dollar standard, but it doesn't set a ratio. But my understanding is that the ratio is roughly reflected the amount that comes out of the ground, the rate that it comes out of the ground. Most of the mines that you mine gold and silver in, they have both. And you also have other base metals. And it's just a matter of how much dirt you move and how much comes out. We know that gold is significantly rarer than silver, but as to what the true Earth's crust ratio is for for gold and silver. I don't think anybody can say decisively. That has to do with a lot of factors. A lot of people have talked about the fact that silver's lighter and it tends to be higher up, and the Comstock lode and other very, very large silver deposits that were taken early, those are gone now. And so for that reason, the gold-silver ratio has been compressing. I think Eric Sprott is often citing the fact that the ratio is dropping now below 10, I think, in some areas. So it seems that silver is getting rarer and rarer. Now, why is the thing blowing out to the upside, approaching 80? Well, in my opinion, that's manipulation. That's the banksters manipulating it, because I've said for many, many years now that silver is their Achilles heel. Silver is the thing that can utterly destroy their system.
His follow-up question is, without the manipulation, where do you see the gold-silver ratio going to?
Well, I think the gold-silver ratio is going to overcorrect. I believe that it's going to cross 1-to-1 at some point in time. That point in time will probably be when people's cards are put on the table. If that sort of a event happens, maybe if there's some kind of reckoning. But the reckoning for the gold obviously is going to be a little bit different than the reckoning for the silver. If the Chinese decide that they're going to back their yuan with gold and try to entice the world into using their currency as the world reserve currency by being able to turn it in and receive gold for it, then they're going to have to make some proof, give some evidence as to how much gold they actually have. And I think that everybody else is going to have to try to put their cards on the table and show what they have. Now, as to showing what silver there is, it's not held by any central banks. It's not considered to be it's not. It's intentionally demonetized, which is a large conspiracy that goes back, over a century for these evil groups. But, and by the way, China is probably the largest victim in history of this cabal and their demonetization of silver. But I think when the cards are put on the table, if they're put on the table, I think it'll cross 1-to-1. It may go even beyond that, and it may be a huge reaction, then come back. But I don't see any reason why the gold-silver ratio shouldn't be the ratio that it comes out of the ground. That's a reasonable ratio. Now, one could argue that silver is much more useful, and then we can get off into the FOA arguments that, that's because it's not money, and gold's only money, and silver's not money, and all that nonsense. But silver can perform all the functions of gold and more. So it should at least be the ratio it's taken out of the ground, if not better.
Jason asks, is it possible that there's more gold than silver above ground?
There's a lot of interesting speculation about, I think it's Yamamata's gold and all these hidden gold stashes. I think Pixwer talks about gold hidden in the Grand Canyon guarded by the U.S. military. So I don't tend to buy into that stuff. Maybe there's truth to it, but whether or not that stuff is true, I think we're already in a situation where the gold, we know the gold isn't being discarded. The term I used in one of my Office series videos, a cartoon series that explains things about silver, the term I used is unmined. And silver is being unmined. In other words, silver that hasn't been mined is more recoverable than silver that's been mined and discarded. And that's because it's discarded in such tiny amounts that it becomes absolutely impossible to do any kind of economic recovery of it. It's in landfills all around the world, and it's been happening for a very, very long time. So there may be a natural 10-to-1 ratio. There may be 5 billion ounces of gold. But I can just about guarantee you that every ounce of gold since Solomon, except for maybe a couple of shipwrecks, and they're still out finding those, is with us today. But not the silver. So if it's 5 billion gold and 50 billion ounces of silver, how much of the silver has been lost is unrecoverable? If that number is 50 billion, 90%, 95%, I have no idea. So a 1-to-1 ratio wouldn't be surprising to me at all.
This viewer is wanting to know about what kind of silver rounds you prefer. They're wondering, what type of rounds do you recommend and why?
Well, that gets to one of the reasons why we have a member site, and we cover and have a lot of discussion with the members to determine what is the best silver to buy. And we're always looking for, the best deals. But basically, to summarize, for probably the last 10 years or so of my silver stacking, I have really shied away from any type of rounds, being just, blank silver, the cheapest silver you can get, and tended more towards the best semi-numismatic coins that I can find. And the reason why is because actually it's from experience, because early on I started buying some of the Perth Mint coins, and I actually purchased, this is back actually, I think it was the fall of 2008 when silver was down around $8.50. And I did some purchases, and I purchased some generic rounds, and I purchased some semi-numismatic coins, and I purchased some Canadian coins. I purchased a number of coins. That was a great time to buy silver. And I watched the performance of those coins and on the secondary market. And what I found was that the coins that had a semi-numismatic value continued to increase, never went down. And but then the junk rounds and stuff like that, you can just only sell it for whatever spot is. And so that was what convinced me to try to pursue. And when you're talking about half-ounce rounds, the only half-ounce rounds I'm interested in are half-ounce Perth Mint rounds. And that's because of the appreciation that I've seen on the coins that I've followed. So that's why I'm not interested in bars. I'm not interested in – and there's a lot of other reasons. Now, for the longest time, I like the silver eagles, and there are a lot of benefits for silver eagles because obviously they're considered U.S. money. The fact they're considered U.S. money means that you're going to have the Secret Service on your tail if you try to counterfeit them. They're the most well-known. The premium is not too high, but it's $2.50 or so. So those are the ones I like. I like the Western mints, the U.S., Canadian, and Australian, and a few others.
I was thinking, as you said, I know you like to purchase, semi-numismatic coins. I was wondering if you could just touch a little bit on that, because I've heard before from other people who say, well, in the event of, an economic collapse, people will only care about whether you have real silver. The numismatic value will probably go away. What is your perspective on that? I would assume that you would probably disagree on that.
Well, there's a lot of reasons for stacking silver. Now, I mean, the underlying reason I think that people stack silver and gold is because they don't trust the financial system, because, frankly, it's run by a bunch of crooks. We all know that. We know that we have a bunch of criminals in Wall Street, a bunch of criminals in Washington. That's pretty obvious to everybody who's paying attention. And these people steal people's wealth. That's what they do for a living. So, it's not just, there's going to be an economic collapse. There could be a slow inflation. There could be a hyperinflation. There could be a deflation. There could be a world war. Or there could just be an economic boom, and solar power could spread across the world, and silver could go to $1,000 with no other prices changing. All those scenarios could happen. Now, the reason why I recommend the strategy that I recommend that people don't overstack. If you are stacking silver with money that you may need, then you don't have any business doing that. So you need to cut down to a silver dime a week, whatever it is. Now, I know emergencies happen. That happens. But, the idea is that one of the appealing things about stacking silver is that it's kind of difficult to convert. right? It's not as easy as clicking a button selling your stocks. If you've got a roll of silver eagles, you're going to have to look around your local coin store, or maybe do an eBay account, or it's going to be some trouble. And if it's numismatic, it may even be more trouble, but it may appreciate in price substantially also. So the point is that those are the sorts of things that make you hang on to your silver. I had a comment recently on a YouTube channel where the gentleman said, well, I made more money in copper than I did in silver. And I said, well, you must have a really big closet. He's like, no, I was trading futures. And my reply is, well, you can trade futures on anything. You can trade futures on stocks. These are all casinos. You can go down and blow all your money at the casino. That's not what we're talking about. We're not talking about trying to make paper profits off of trading paper. We're talking about protecting yourself from collapse in the value of paper assets. We're talking about the confiscation of your assets. We're talking about bank bail-ins. We're talking about hyperinflation. And whatever strategy it is that causes you to hang on to your silver and not sell it and get the most appreciation, that's going to be the best one.
All right. Well, Brother John F., thank you so much for your time today. I guess before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you on the internet? Sure.
You can find the site. I have a public blog, BrotherJohnF.com, and there's also a member site. It's BrotherJohnF.biz, B-I-Z, and you can sign up for $150 a year and become a member. And that's where we discuss our investment strategies, pretty much a group of like-minded people, for the most part, Christians, patriots, and people who like gold and silver, but anybody's welcome. So, that's BrotherJohnF.biz.
Once again, John, thank you so much for your time today.
All right. Thanks a lot, Elijah.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with John Rubino from DollarCollapse.com. In this interview, Rubino discusses commonly heard lies about the economic recovery, debt, retirement, and immigration. Rubino also discusses what a prudent person can do to protect their family and profit from the coming collapse.